This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. I did a post yesterday, just a review, if you will, of some of the key themes that I keep talking about within energy and the rest. Halo stock is Exxon Mobil. Well, XLE, which is heavily weighted in Exxon and Chevron, has already exploded higher. Here's my XLE to SPX ratio that I identified. And just so you can see, straight up hockey stick type of thing. And still XLE to SPY ratio is just breaking out. What does this mean? It means right now you protect because it's very extended, but it doesn't mean that it's going to do a 180. It just means that you've got now a lot of sponsorship. This morning, Goldman Sachs is out. It's hysterical, really. Goldman Sachs is out saying the halo trade is in play. So this is the heavy asset, low obsolescence. So we're talking oil and gas processes, which is really exactly what I wrote, literally. So we've got a lot of these that are now getting sponsorship is how I like to look at this. When I wrote at the beginning of the year for my 2026 predictions that boomer stocks are the new inflationary assets, and prior to that, rotation and recession into all-time highs in December, and prior to that in November, sell the rumor of consumer cyclical slowdown by the news. All of that is halo. And this is why, and this is literally what I wrote, I see metals pricing keeping a bid in large industrial companies, including those that are used to extract, process, distribute oil and gas. So that's what kind of caused this lovely ratio of XLE to SPY to start here into approaching its channel at this level. This is where it typically can stay there, volatile, but it's got to digest and or have a reason to get and stay above, like, of course, oil spiking higher on closure of the Straits of Hormuz. So long story short, I'm still pretty darn bearish the market as it relates to Iran escalation coming into play in that March timeframe also. And I'm still pretty bullish things over paper, which is the halo effect that Josh Brown came up with naming, and then Morgan Stanley came out, I think, Monday. And then this morning, Goldman is literally saying the renewed plunge in the shares of perceived victims in the AI revolution has investors wondering where to turn for shelter. And basically they say one answer, according to Goldman Sachs, is capital-intensive companies such as utility, miners, some industrial firms, and even luxury goods makers. So that's the latest from Goldman. You've got Morgan, you've got Josh Brown, you've got all these themes in play. This is basically it in a nutshell of what's outperforming the S&P. So on the low side, you've got communication services and technology. On the upside of a very, very strong, robust rally, you've got materials, energy, staples, industrials, and utilities, consumer discretionary, and real estate on the laggards, let's call it. Anyway, I am still very, very focused on this left tail event of volatility, but I also want to warn and highlight something. We will have bounces and they will be outsized and VIX will come on down. So remember how this over here in 2025, we had Trump come in and then we had some volatility pick up and then it pulled back down. And then we had the real excitement February to April. Do you remember this? February to April. So this is the same thing that can happen over here. Take a look. We could have VIX crush and still stay in the positive above this red line and then pick back up. I'm talking about a good March, April, May timeframe for protection. We can have what's called right tails, cheap out of the money calls that folks are giving up on or have been shorting against and buying puts can actually reverse violently. We can have some really big rallies and VIX can come down. We can have that type of setup. This is very much the case with, remember that chart that I showed you? This. So remember I said growth value ratio. When we collapsed back in July into August timeframe, we had some massive rip your face off rallies where they monetized puts. That's the key. And so boom, and then it would come right back down in September. And it really wasn't safe, big picture, until about October of 2024. Then we had that kind of move up into December. Growth really took off. Anyway, same thing happened in this January, February timeframe, and then whoosh, it dumped. Tech dumped in large part from that February, March, April timeframe, and then got back up in May. That's the same type of thing that I'm warning about now. But in the interim, there will be rallies. That's the right tail. So we're talking about Halo digesting, but still has lots of sponsorship for 2026 theme. Okay, I'm not saying it's done, but I'm talking about right now the fact that volatility is edging higher. We can have waves of volatility for the next few months. That's my baseline bet. And we can have outsized rallies. So for example, this is the famous Charlie McElligott of Nomura. And this was highlighted by a contributor that I follow. Yeah, Scott Murray. So this is basically extreme skew right now is what they're talking about for downside protection, upside VIX. This can create this over VIXing. Jason also in our Volland channel talks about it. That can actually create equity rallies that investors are not expecting. They're under-owned. Nobody owns the right tail. Think Netflix, Oracle, that kind of stuff. That's what can really, really kind of suck in bulls and go through this massive chop period with volatility rising. Hence, I'm not done with volatility. I'm talking about waves of volatility. We can have waves of volatility rising over the next 2 months with both left tail and right tail. That's a quant term for rallies and dumps, just like we had in 2024, 2025. I see the same type of gyrations forming right now. Remember how I just said these protracted dumps? Thomson Reuters is one that I literally wrote up and said, this is your poster child of an IGV. IGV, you can also see it's trying to digest, but look at TRI, because I think this one matters more. TRI, Thomson Reuters, owned by a Canadian private equity firm. They kind of consolidated a whole bunch of private equity. Also, Thomas Bravo is another one. Lots and lots of, like they bought Coupa Software. They buy all kinds of companies. They got hit the hardest because all this private credit, private equity tied into a no exit door. You can't just get out. So it's very hard for investors and pensions and such to get out when you're trapped in private equity. It's not publicly easy. Case in point where they monetized and monopolized their legal software. It is now threatened by AI. Not sure how obsolete it can be, but nonetheless, it is threatened by AI in a big way that was already selling off until we finally realized, oh my gosh, this is really affecting lots and lots of sectors. When I wrote this up as a case study of this entrenched downdraft because of AI obsolescence threat, investors sell first. First of all, the investors, the really big ones are already out. It broke everything. 50 week, the 100 week, the 200 week, and then the 400 week, right? Now look at it. They're monetizing puts here. This is the right tail I'm talking about. This is extremely supportive, 82.51. Now, it doesn't matter. We're just having a little bounce. I'm not saying this is a trend reversal, but what I'm saying is you now have 82.51. I set this up and I said, this is 2000 and February 2020 highs before the COVID crash. And then it got and stayed above in 2021. And then it pulled back to the 100 week and then it got above and it has just not seen the 100 week until just recently. Specifically, September 2025, it just gapped and crapped and it's been an absolute mess. Literally since they joined, by the way, the NASDAQ, ironically. That is support. This is what I mean by right tail. They're having a very strong reflexive bounce in an extraordinarily strong downtrend. Look at this thing. It's up 12, 13%. That's what I'm talking about. Right tail right now is a thing. Stuff that is that protracted on a downtrend is going to have these bounces where puts are monetizing. That's it. And then we will see if in fact we get this follow through, which is, by the way, not a surprise, where Nomura sets up. We've got extremely steep S&P skew and dispersion in NASDAQ. We've got VIX call skew. You start to bring that VIX in, like I sized up this morning, under 20.5-ish area. You get a long in the indices, and you get this right tail risk in extreme dispersion from these massively oversold plays that have massive profits in puts start to monetize. And now they're under-owned. You're going to see this. You're going to see this pop, 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 pop. and you're gonna get a little bit of a lift here. It's slow, it's very slow. And then all of a sudden, people will start chasing it. And then as soon as they start chasing it, they're gonna get their heads handed to them because it'll roll right back over.
Join Club to trade with Samantha. Scan this QR code or click the link in the description.